I think they'll choose the print every time. But let me just caution all who are listening to this. They could create a lot of pain before they do the big print. I mean, they could, they know that they're on the knife's edge of currency failure. And so they're going to possibly try and delay the big print as long as possible. I mean, we know the third Fed mandate is if something breaks, they will print money. We saw it in '08, we saw it in COVID. And so what I believe will happen is, the stock market or the bond market, one or the other, or perhaps even both, will quote unquote break. And at that point in time, the Fed will suddenly pivot and say, well, we're trying to fight inflation, but we can't let the system fall apart. And therefore, we need to reinstitute quantitative easing.
Bitcoin's recent surge has reignited global investor interest, breaking out to new highs after a prolonged period of consolidation. Capital isn't just pouring into BTC, it's spreading across the entire digital asset landscape. While some attribute this momentum to ETF inflows or speculative risk-taking, a deeper, more structural narrative is emerging. It's a story rooted in macroeconomic deterioration, weakening fiscal discipline, and a growing loss of faith in fiat-based systems. At the heart of this viewpoint is investment manager Lawrence Lepard, known for his sharp insights into monetary history and sound money principles. Lepard presents a compelling thesis. Bitcoin's rise isn't a fluke, but a logical reaction to a system defined by endless debt creation and the collapse of real yield. With governments increasingly funding deficits through monetary expansion, Bitcoin's capped supply offers a stark contrast and a lifeboat. He describes the current financial backdrop as a late-stage fiat era where inflation is persistent, real assets are regaining prominence, and smart investors are hedging not just against market cycles but against the entire structure of the financial system itself. Historical parallels and current data support his claim that the shift away from trust-based, centrally managed currencies is not only real, it's accelerating. For capital allocators, the implications are massive. Lepard argues we're in the midst of a generational shift in value, from paper-based promises to tangible, decentralized asset. Bitcoin stands at the forefront of this transformation, potentially just beginning a broader repricing phase. This moment, he believes, is not about short-term trades but long-term strategy, one that redefines how portfolios are constructed in an era of rising systemic risk. As the conversation unfolds, we dive deeper into what this means for Bitcoin, the bond market, the global economy, and the future of monetary systems.
But why is Bitcoin going up now?
Well, a lot of reasons. I mean, the biggest picture, I think, is just continual monetary debasement. That's kind of, the book describes this as kind of just baked in the cake. This is Lynn's model, and it's been my model as well, that when you're expanding debt and you're expanding the monetary base more quickly than you're expanding GDP, that's an inflationary thing. And, Bitcoin is fixed algorithmically to 21 million coins, so it will not expand as all these other monetary base expand. So in dollar terms, Bitcoin, I'm with Saylor, Bitcoin is going much, much higher. It's going to multiple millions of dollars per coin over, the next 10 to 15 years. So I'd say but to point to the biggest cause is because the fiat system and the Keynesian model really just kind of requires continued inflation. And there was a time when that was, calmer and people weren't paying attention to it, like the 80s, after we had the gold rush in the 70s, and then Volcker got things under control. And, most people weren't paying attention to sound money during the 80s. But, it's gotten steadily worse, this issue of government spending and debt. And I think now we're kind of at the point where the pot is really on the boil. It's happening very quickly now. And as we all know, we hit a record high price today, 109, and I see us going to 140 or 150 this year pretty easily, and potentially higher. But I'm very comfortable predicting that. I think the trade wars actually kind of feed into all of this. I think all of the economic problems that are bubbling up all over the place, including the Japan bond market, which appears to be kind of in a state of falling apart, I think all of these feed Bitcoin. The Bitcoin used to be the price used to be correlated with the S&P, or I'm sorry, with the triple Qs and the Nasdaq, because it was kind of viewed as a risk-on asset. And I think we're in the process of seeing that change. I think it's now starting to trade more like digital gold. And what's going on is these two assets are really beginning to realize that the government is in a trap, that they just cannot stop printing money to keep the system running.
This is how you buy and sell crypto the easy way, using eToro, one of the world's leading trading platforms. If you're new to crypto, eToro makes it super simple. Let me show you how I bought Solana in just a few taps. First, head to the search bar and type in Solana. Tap on it, then hit trade. I'm going to invest $10, that's the minimum. Now just hit buy and done. I now own Solana. Selling is just as easy. Go to portfolio, tap your Solana asset, then click close and confirm your sale. Super simple. That's how quick and beginner-friendly eToro is. But here's why I use eToro. Earn up to 4.3% interest on non-invested funds, 0% commission on stocks, and you can set up an account in just minutes if you want to start your crypto journey. Use my link in the description to sign up to eToro today and start trading.
And once that becomes widely known and understood, we'll have kind of what I call and describe in the book as a mass scale Gresham's Law-like event where people want to get out of other assets, particularly bonds, that are denominated in a fiat currency and get into the two currencies that the government can't print, which are gold and Bitcoin. And I prefer Bitcoin to gold because it's got an adoption cycle and it's got so many advantages over gold. But I don't shit on gold. Gold's got merit. It got us all the way to 2008, and it's not going to disappear overnight. It'll still do a job of protecting some of your purchasing power, but Bitcoin's a much better choice.
For the folks at home, what is Gresham's Law?
Oh, sure. So Gresham's Law, Sir Thomas Gresham was a guy who was an advisor to Queen Elizabeth back in the 1500s. And what he said is, and so the issue of monetary debasement, this isn't new, right? This has been around for thousands of years. People have cheated on the money. The Romans clipped coins and sovereigns clipped coins and everybody, the denarius, which is the Roman form of coin, was started off all silver. By the end, it was all iron. Um, and Gresham's Law says that people can figure out when the money is going bad, i.e., if that kind of debasement is taking place, the average human being will look at the money that they know is losing value, in other words, where prices are going up in that money, and say, and then they'll look at another form of money maybe that's not losing value, let's say an ounce of gold, and the price of something in an ounce of gold won't be moving at all, and they'll say, huh, I get it. This one form of money is losing value, this other form of money is holding value. I'm going to spend the one that's losing value because why wait around for it to lose more value? And I'm going to hold on to the one that holds its value, which is gold. And so the law itself is written down as good money drives or bad money drives out good. And what that means is that if the money is going, if one form, and there are always a couple forms of money going around in any economy, if one form of money is going bad, i.e., being debased, that will cause people to hoard the good money and spend the bad money. So, and at the extreme, like in Weimar Germany in 1921 through 23, they literally, throw out, the bad money and use wheelbarrows with which, because the printing presses were running so hot to purchase things, and they hang on to the good money, which in that time was gold or the dollar or the British pound.
As Bitcoin hits new highs and gold quietly sets fresh records, savvy investors should ask not just what's driving these moves, but why now? Beneath the daily price fluctuations lie deeper signals pointing to a looming turning point in the global financial system. Lawrence Lepard sees the recent surge in hard assets not as mere speculation, but as a market warning. Investors are pricing in the consequences of unsustainable debt, negative real interest rates, and the growing limits of monetary policy as a tool for stability. Lepard argues that this isn't just a typical bull run, it's the early stage of a fundamental revaluation of money itself. To grasp the significance of these shifts, he points to several key macro indicators, leading signals that speak louder than any central banker's statement. These charts serve as barometers of trust in the fiat system and early warnings of the policy actions that may soon be necessary. In the next segment, he highlights 4 crucial charts, from gold's breakout to dislocations in long-duration bonds, explaining what they reveal about market expectations, government solvency, and the likelihood of further central bank intervention. For those looking to understand where Bitcoin and the broader markets are heading, Lepard suggests starting with the bond market and watching closely what policymakers might be forced to do next. These indicators offer vital clues to the evolving landscape and could signal the next moves in the financial system's ongoing transformation.
That's why everybody, I don't know about you, but when I go to the grocery store, I get horrified. I mean, the cost of groceries is just insane. I mean, it went up so much in the last 3, 4 years. It's been horrible. And so, and so I think we've got more of that in our future, sadly. I mean, yes, it's an everything bubble. So the reason it's a bubble and the reason we got to this point, and it's useful to discuss this, is that they kept interest rates at zero from 2008 to 2015. Remember, they had ZIRP, which stands for zero interest rate policy. They also kept them at zero from 2019 to 2022. And that created an enormous, enormous bubble because money was free. And so people borrowed and then they used it to lever up and buy yielding assets. Okay. Um, so the question of do we need it to burst for Bitcoin to go to new highs? It's unclear. I mean, if the Fed just pivots and starts printing money, no. But what I see is that we've got a Fed chairman who wants to be Paul Volcker, who's determined to correct the excesses of the COVID print. And so he's being very tough about not dropping rates quickly. And my sense is that what that's going to lead to is that something's going to break. I mean, we know the third Fed mandate is if something breaks, they will print money. We saw it in '08, we saw it in COVID. And so what I believe will happen is, the stock market or the bond market, one or the other, or perhaps even both, will quote unquote break. And at that point in time, the Fed will suddenly pivot and say, well, we're trying to fight inflation, but we can't let the system fall apart. And therefore, we need to reinstitute quantitative easing. We need to, use yield curve control to cap the interest rates on the bond market. And we stand ready to buy whatever bonds are being sold by the market. I think that's what we have in our future. Now, what's really tough, also, is just we don't know when that's going to happen. It could happen tomorrow. I mean, I can't see it happening taking more than 2 years, but I give it. It could happen. They could drag this out for a while. It could be 18 months or so before it happens. But I think what we do know because of the math is that it has to happen because without more money in the system, you don't have the capital to pay the interest on the growing bond balances. So it's really kind of a problem.
Is there any scenario where they don't print their way out of it?
I don't think so because I think eventually we'd enter the Great Depression, and I think that politicians presented with the ATMs aren't going to work and we're going to the Depression versus we are going to print to keep things running. I think they'll choose the print every time. But let me just caution all who are listening to this. They could create a lot of pain before they do the big print. I mean, they could, they know that they're on the knife's edge of currency failure. And so they're going to possibly try and delay the big print as long as possible. And, what would that look like? Well, I think if you go back and you study March of 2020, that's a good example of what it might look like. I mean, in that period when COVID hit, stock market went down 30%, gold went down 30%, Bitcoin went down 40 or 50%. Everything got hit because it was a trade correlation of one, and liquidity was just way too scarce. And then, of course, what happened is on a Monday morning, Jerome Powell came in and announced, a laundry list of programs and said he's basically prepared to buy an unlimited amount of bonds, whatever it took to stabilize the financial markets. And of course, everything turned around very quickly. The stock market went back up, gold went back up, Bitcoin went back up, etc. So, but what that told me is that at some point in time, they were looking at the entire economy melting down. And you were younger, you weren't there, but I remember it quite well. I mean, in 2008, when that one happened, same idea, same event, although it was focused on housing and the banks. The not Jerome Powell, Hank Paulson, went down to Washington, D.C. and was literally, on his knees begging to Nancy Pelosi and said, if you don't give us $700 billion for TARP, the ATMs aren't going to work tomorrow. And so Congress passed a bill, to give them $700 billion for TARP, which of course the Federal Reserve printed to do. So, I think that politicians backed against the wall, as bad as the inflation associated with the printing is, they'll view it as, well, we'll deal with that later, and I've got to keep the system running. That's so I think to answer your question, no, I don't think they'll let the system collapse. I mean, if they do, Bitcoin, gold, all these things aren't going to matter. You're going to want to have food and lead, I mean,
And
because
gun.
it'd be an ugly situation, I think.
Lawrence Lepard makes it clear that the current rally in Bitcoin and gold goes beyond mere speculation. It's a signal of deeper structural imbalances in global financial markets. Increasing government debt, rising interest burdens, and shrinking options for central banks all suggest that money printing will soon become a necessity rather than a choice. The market is aware of this reality and is positioning itself ahead of the next phase, with the strongest evidence seen in the relentless demand for crypto ETF. Even the Memorial Day holiday couldn't slow inflows, as Bitcoin ETFs recorded their ninth consecutive day of net gains, pulling in $384.85 million in a single session. While some funds like ERKB and GBTC saw minor outflows, BlackRock's IBIT ETF led the charge with over $49 million in new investments, solidifying its status as a primary institutional gateway to Bitcoin exposure. Other ETFs, including Grayscale's Bitcoin Mini Trust, VanEck HODL, and Bitwise BITB, also contributed significantly, pushing total value traded to $3.9 billion and boosting total net assets to $132.89 billion. Ether ETFs followed suit, extending their rally with 6 straight days of inflows, adding $38.77 million led by BlackRock and Fidelity. For serious investors, these flows reflect more than short-term price moves, they represent strategic positioning for what's next. As pressure mounts on monetary authorities to act again, the market is already moving. Whether through institutional allocations to Bitcoin ETFs, gold testing new highs, or bond yields breaking critical levels, the message is clear. The era of sound money alternatives is no longer hypothetical. It's accelerating, whether or not central banks pivot. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.